We are now starting our next session. This session is the great debate, are Islamic financial institutions working towards financial inclusion and shared prosperity? I would first like to invite the session chair, Dr. Zaheer Iqbal, to please come on stage. Dr. Zaheer Iqbal is the lead financial sector specialist, finance and market global practice, World Bank Global Islamic Finance Development Center. Please put your hands together for Dr. Zaheer. As the first panelist of this discussion, I would like to invite Professor Dr. Ahmed Musa Wang Gangbao, Director of Institute of Islamic Law, Economics and Finance, Northwest University of Politics and Law, China. Please put your hands together for our friend from China. Our next guest is Syed Samar Hasnain, Executive Director, Development Finance Group, State Bank of Pakistan. I would now like to invite Mr. Ariful Islam, Deputy CEO and Executive Director, Mizan Bank Limited. Mr. Rizwan Atta, Head of Islamic Banking at Bank Al Falah. I would like to invite Mr. Rizwan Atta to please come on stage. And Mr. Zubair Haider Sheikh, Head of Corporate and Investment Banking and Cash Management, Dubai Islamic Bank Limited. Mr. Zubair Haider Sheikh. So over to you, Dr. Zaheer.
Bismillah ar-Rahman ar-Rahim. A very warm welcome to everyone and good afternoon. I hope you don't have a very heavy lunch because we are going to have a very heavy debate. I think I must appreciate the organizer that putting this particular debate online. I think we just in time we have Professor Abbas who was supposed to be here joining us. We are very lucky to have him on this panel. Now, in this session, we are going to be talking about, the whole issue of financial inclusion and shared prosperity. Maybe for the sake of everyone, I just want to indicate, what is the concept, where this shared prosperity comes. This recent realization among everyone that there is a growing inequality between the rich and the poor and all over the world. Issue was that how do you might have a prosperity and growth in many countries, but that growth does not trickle down to the bottom, the poor people. So for that matter, after the financial crisis and seeing the social cost being paid by the poor people, there's a new realization that the growth has to be such that the prosperity has to be such that it can be shared by at least the bottom 40%. Because if those are not taken care, then you really cannot have a good, a good kind of it's not good for the economic development in the long run. It's not sustainable. So the whole issue of inclusion and shared prosperity are very much related. And I gave some statistics yesterday that about 73% of adults in the world, which is more than 1 billion adults, do not have access to any financial, a formal financial service, whether it is bank account or whether a payment system or any form of financial transaction. Then out of that 73%, 22.2% they are coming from OIC countries. So that tells you that the problem is much graver in case of Muslim countries, and that something needs to be done about it. Now we are very lucky that we have a very, I would say, very balanced panel over here, starting from academia as well as the regulators, and then we have some practitioners. So in that way, I would really see that not only it is a great debate, but it's also a very powerful panel. So if I may, what I would like to do is that split this debate into two parts, basically. One is mostly issue of the inclusion and seeing that it could be just based on the infrastructure or the financial infrastructure and all these things, payment systems. And the other one could be more specific to Islamic finance and what Islamic financial institutions are doing or what they're not doing, what they should be doing. I think what I would like to do, I would like to start with more from a theoretical and academic, input. So if I may request Professor Dr. Abbas Mirahor to give us an idea of why Islamic finance would be more suitable for shared prosperity and having better inclusion. So if you could kindly share with us the theoretical concept, in what way Islamic finance has more to offer compared to the conventional solutions, please.
Thank you very much. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala Sayyid al-Mursaleen wa Khatam al-Nabiyyin Muhammad wa alihi at-tayyibin at-tahirin. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, Dr. Zaheer. What we have to look at Islamic finance to say what makes Islamic finance Islamic. There are three litmus tests for Islamic finance as far as the society as a whole is concerned. The first one is how well it helps alleviation of poverty. You can take it from Hadith and the Quran as axiomatic that in any society where there is widespread poverty, that society is not Islamic, period. The second thing is, how does that happen? How does Islamic finance as a whole and Islamic society reduces poverty or eliminates it altogether? Islamic finance is an instrument which Islam itself targets as an instrument of wealth building, wealth holding and wealth building. Right now, if you look at across all societies, including most of the Muslim countries, there is a problem with financial inclusion. Now, financial inclusion isn't just simply that somebody walks into a bank and he's given a set of checks and then sent on their way. Inclusion means being able to use financial instruments and financial structures to diversify the sources of income for society, for individuals within the society. The most serious problem of the poor is that they have no way of trying to reduce their idiosyncratic risks. Some manage to save some money, some don't, and so if they're faced with these risks, for example, somebody's daughter is probably will marry sometimes in the future, and people save thinking that maybe by the age of 18 or 19 the girl will get married. If all of a sudden the decision is made that the daughter will get married early and there isn't enough money, that's an idiosyncratic risk. That means there's a risk to the individual that is not possible to insure against. There is no instrument of insuring. To do that, you have to create ways and means by which individuals build wealth, build different sources of income, and that is what Islamic finance is supposed to do. And the third important factor is that Islamic finance will help income distribution to become more equitable. The fact that debt-based systems, interest rate-based debt systems, create inequality was recognized by no other than John Maynard Keynes, both in his book, General Theory, and in 3 or 4 different articles, including his treatise on money, 1930s he published it. In 1931 he has a paper in which he says capitalism has 2 major evils. One is that it is incapable of producing full employment. Second is that it creates huge income redistribution problem. And then he says the villain of the piece is interest rate debt system. Now, if you look across the last since 2012, you have at least 10 articles by major financial experts that have written about the evils of debt, interest rate-based debt. And some of them are claiming that this system is has already hit the wall, and that it is no longer possible for capitalism to rely on interest rate-based debt system. So therefore, what we hope that if any real Islamic finance eventually comes into being, it would try to reduce at least both poverty, income redistribution, and allow people by true inclusion to build wealth in order to hedge their idiosyncratic risks. Now, this is the way Islamic finance would ensure inclusion, and it would also include, allow poverty to be at least reduced, if not totally eliminated. Thank you.
Thank you so much. Let's continue with our academics first. So I'm going to request Professor Janbro Bao to please give his views on how Islamic finance provides a different or better answer on sharing prosperity and enhancing inclusion. Sure, please.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على سيدنا أشرف الأنبياء والمرسلين وعلى أصحابه وآله المطهرين أجمعين أما بعد. Sisters and brothers, Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I should thank the chairman of this session. And I have to thank the organizers of this forum for inviting me as a speaker. Indeed, it is an opportunity for me to learn from the scholars and expertise, especially from Prof. Dr. Abbas Mirakhura and Dr. Zamir Abbas, since I know them several years ago. I was visiting associate professor in INCEIF 2012. Thus, I'm the learner today rather than the speaker. Now, before we are entering into the discussion on the topic, Islamic financial inclusions or institutions working towards financial inclusion and shared prosperity, I would like to refer a paper to you all, Risk Sharing and the Shared Responsibility in Islamic Finance, written by Prof. Abbas and another co-author, Nabil, published in Islamic Economics Studies, Volume 23, Number 2, November 2015. So, of course, I'm not going to criticize this paper, since I have no enough knowledge related to the topic to do criticism. As well as I stated that I'm a learner today, rather a speaker. Besides, I'm one of the supporters of the risk-sharing modes of Islamic finance. Why? Because it is approach or a mode fulfills the objectives of Sharia or maqasid al-Sharia, which, as our ulama have emphasized, enlightened through the history of Islamic jurisprudence, like Imam Ghazali, Imam Shatibi, Imam Ibn Ashur, and others. In the mentioned paper, Prof. Abbas points out risk sharing is an effective method of expanding participation of agents in economic growth and development, and the more effective sharing of the fruits of prosperity than risk transfer that currently dominates the financial system, including Islamic financial institutions. That's why a group of leading scholars, I mean Sharia scholars, and the Muslim economics considers the risk sharing as the essence of Islamic finance. This point mentioned in the first day of the keynotes by Prof. Abbas. So a test of which is its ability to promote financial inclusion and asset building capacity of poor, and thus better sharing of the prosperity. The mobilization of financial resources toward productive activity, economic justice, and the social participation in an effective manner. Maintain justice in every aspect of our daily life is the order, command, and instruction which the Holy Quran states. Allah subhanahu wa ta'ala says, أعوذ بالله من الشيطان الرجيم إن الله يأمر بالعدل والإحسان وإيتاء ذي القربى وينهى عن الفحشاء والمنكر والبغي يعظكم لعلكم تذكرون. Surah An-Nahl, ayah 90. So this ayah means Allah commands justice, the doing of good deeds, doing good, and the liberty of kith and kin, and he forbids all shameful deeds and injustice and rebellion. He instructs you, so believers, you may receive the lessons from Allah subhanahu wa ta'ala, or even from the current crisis that occurred in the finance system. In another ayah, we may refer here, يا أيها الذين آمنوا كونوا قوامين شهداء لله شهداء بالقسط ولا يجرمن شنآن قوم على ألا تعدلوا يعدلوا هو أقرب للتقوى واتقوا الله إن الله خبير بما تعلمون. Surah Al-Ma'idah, ayah 8. So this ayah gives us an idea. We keep or maintain justice not only for Muslims but for non-Muslims too. So we share the prosperity as non-Muslims proposed to us. There is a strategy proposed by our president, Mr. Xi Jinping, in 2013, One Belt, One Road strategy. His intention and our intention as well is to share the prosperity of economy in the world. So non-Muslims and the Muslims can share together the prosperity, but we have to show as Muslims, our essence of Islamic finance, or essence of economy, which is justice, and I refer to justice here is risk sharing. The meaning of this ayah, all you who believe, stand out firmly for Allah subhanahu wa ta'ala as witness to be with or let not the hatred of others to you, to make you keep away from the justice. So be justice. You don't depart justice. Here is my explanation. Accordingly, this paper attempt to demonstrate that the risk-sharing method or modes of finance real investment in the public and the private sector reduce the poverty, and the real investment conduce a more effective channels of saving towards development of finance in the world. So I got many papers, many things would like to share with you, but since the 1 minute is left to me, I share with you two news. One news I mentioned before, it's good news that a One Belt, One Road strategy proposed by China government and started with the Pakistani government, as we know, is the China-Pakistan economic corridor. And we have opportunity and the potential to introduce Islamic finance through this channel, inshallah. Another, or the second good news, just yesterday, the local Hui Autonomous or Ningxia Hui Autonomous region has requested me to write a proposal that's related to the cooperation between China and the one belt, one route, and route countries. So many Muslim countries we are cooperative with China. So this is another opportunity that I have to share with you. And I submitted the proposal to the government last night, and alhamdulillah, it was accepted by them. What is my topic of proposal is risk sharing as a mode of cooperation between China and one belt, one route in route countries. So the last, but not least, alhamdulillah, Allahumma ij'al hadha baladan aminan warzuq ahlahum min ath-thamarati rizqan lahum. So to conclude my speech here, Mahabbati Pakistan. Thank you very much.
Thank you so much. So I think after listening to these first two thoughts from first two scholars, there's no doubt in our mind that Islamic finance and Islam itself offers a very comprehensive framework which should lead to better inclusion and better and more enhanced shared prosperity. So I think let's move to more real world coming out of academics, and let's go to the policy makers. So here we have one of the very leaders who has taken a lead in terms of financial inclusion. We have Mr. Samar Hasnain, who's Executive Director, Development Finance Group at State Bank of Pakistan. And I had a pleasure of working with him when they were trying to develop a national strategy for financial inclusion. So I'm keen to hear from him that what are the public kind of policy perspective on achieving these objectives and how Islamic finance comes into play with it.
Thank you, Dr. First of all, I would like to thank the organizers of this forum. The subject that we are discussing right now is something which is very close to the heart of the central bank, financial inclusion and Islamic banking. And let me say it upfront that on the motion that our Islamic financial institutions working toward financial inclusion and shared prosperity, I reluctantly will be arguing against this motion. And I have reasons to say that, and since I'll be building up an argument on that, so I'll have to refer back to my papers again and again, so I apologize for that. Upfront financial inclusion, Dr. Abbas has mentioned that from a different angle. Access to finance is not all about financial inclusion. It's also the use. And it's not limited to the use only. It's also the efficiency. And it's not that the only Pakistani central bank is working for financial inclusion. More than 100 central banks across the world, they're working on financial inclusion aspect. Now, this financial inclusion in Islamic banking has again been touched in early two speeches, but I'll try to touch very quickly on that from a different angle. Islamic financial institutions have been set up for three, and they have got three characteristics. First, that they attract those who have faith-based exclusion from the financial system. Secondly, the system is primarily asset-based, so it ensures financial stability. And the third characteristic of Islamic financial institution is the risk sharing that we heard earlier. Now, all these three characteristics then combine into an objective which is inclusive financial growth, which ultimately leads to the poverty alleviation. So the ultimate objective comes to the poverty alleviation. This was all about Islamic banking. Now the financial inclusion, if you look at the ultimate targets of the financial inclusion, then again through a complete route it goes back to inclusive financial growth and poverty alleviation. So on these ultimate objectives, Islamic banking and financial inclusions, they converge together. Now when I said that I reluctantly move against this motion, the reason is that Islamic banking industry presently in Pakistan is not actively serving financial needs of some of the real sectors. They have Islamic banking, by virtue of their nature, have an inherent advantage of funding to the real sectors, which are agriculture, SME, micro, low-cost housing, and some of the infrastructure projects. One could always argue that when I use the word is not actively serving, what should be the right adjective? Should it be less actively, passively, or not at all? So one can always argue on that. Now, why did I say that? Because if you look at the figures of the Islamic banking industry, and if we try to compare that, the sort of funding and the financing that Islamic banking industry is providing to these particular sector vis-a-vis industry averages, then we look at against an industry average of 5.6% financing out of the total private sector credit to the SMEs. The share of Islamic banking is 2.8%, which is half of that. Though 5.6% itself is extremely low. But if you look at the agriculture sector where Islamic industry is providing financing, it comes to be extremely low. Against an average of industry of 6.8% financing being provided by the industry compared to the private sector credit, Islamic banking industry is providing 0.8%, less than 1%. What is the central bank doing in these two areas is looking at the situations. Central bank is now giving and allocating targets within the bigger targets to the Islamic financial institutions as well. We'll have to see as to how do these targets work. The third area, which is the microfinance institution, is slightly better compared to agriculture and SME. The institutions like Khawaja and Wasil Foundation, they're working pretty nice in promoting Islamic financing and providing financing to the real sectors that I mentioned. One of the report of the Pakistan Microfinance Network says that against 4 million borrowers of microfinance, approximately 13% are those who are from these sectors. Likewise, out of the total gross portfolio, 7% funding is going to these real sectors. Again, the central bank's role is to provide enabling regulatory environment to promote Islamic microfinance, and for that purpose we have set up the regulations in terms of which full-fledged microfinance banks, Islamic microfinance banks can be set up, or the branches within the microfinance banks, Islamic branches, or their windows, or the divisions could be set up within the microfinance institutions. NRSP, of course, I would take their name, is doing pretty well in that area. If you look at even in terms of the number of branches of Islamic banking industry in Pakistan, then 78% of those branches are concentrated in two provinces, which is Punjab and Sindh. But more interestingly, 52% of the total branches of the Islamic banking industry is only in 5 major cities. So that shows how much concentration is in that, and one can always try to link it with financial inclusion, which is more and more needed in remote areas where the people do not have a normal access to the finance. The situation would not be very different even if we take the conventional banks branches network in that. But since we are talking about the Islamic industry here, so I'll be focusing more on that. One of the study which was conducted by State Bank of Pakistan was about this knowledge, attitude, and practices. And it clearly says that there is a huge demand from the market, both on the individual level and as well as on the corporate level for Islamic products. And it clearly mentions that there are people, there are individuals, and there are institutions who have opted for voluntary exclusion from the system because they do not have an access to finance to the Islamic banking. So it's an issue of perception as well. Of course, against my argument, and I'm sure that would come, one could always say that there are the costs involved into that. Yes, there are the costs involved, but then you have got the solution. You can take benefit of the technology. Branchless banking is working extremely nice in case of the conventional banks, and now some of the Islamic banking institutions have also started, so they can always capitalize on that. Research and development and human resource, again, is one of the area, and this center of excellence is working for that. The last point that I would like to mention is that access to finance survey, the latest one was conducted in 2015. The previous one was in 2008. That shows that there is a substantial movement in terms of improvement in terms of financial inclusion. But for example, I just give you a number that in 2008 it showed that 12% of the people have access to the formal financial sector. This 2015 survey says the number has increased to double to 23%. Likewise, 11% adult population have had their bank accounts in 2008. Now that has gone to 16%. Interestingly, in case of the women entrepreneurship, 11% women now have an access to the bank accounts compared to 2008, which was 4%. And this is precisely the reason that the National Financial Inclusion Strategy, Dr. You mentioned about that, that was set up in Pakistan. It was now it is being implemented. And one of the key themes of this National Financial Inclusion Strategy is that in case of all these priority sectors, agri, SME, micro, housing, especially low-cost housing, infrastructure, Islamic banking should be a cross-cutting theme across all of these sectors. So that's a point where the central bank efforts, along with all other stakeholders, converge on enhancing financial inclusion in that. And with that, I conclude that by saying that I close this debate from my part with the argument that Islamic financial institutions, they have been set up to promote financial inclusion, not only at individual level, but also at the agri, SME, low-cost housing, women entrepreneurship, and they were meant for shared prosperity. But the actual achievements have not been up to the mark. There are regulatory costs involved, but then there are regulatory solutions as well. There are other solutions as well, like the one I that mentioned about technology, innovation of products, efficiency, service level improvement. All are these factors which would help in reducing the cost and would allow the Islamic banking industry to have an access to the financial inclusion. Thank you.
Thank you, sir. I think I would like to add over here that Pakistan is one of those countries who has developed a national strategy for financial inclusion. Otherwise, many other countries do not have, so which is, it's a very good thing. At least it shows that things are moving in the right direction. So we heard from the academics, we heard from the public policy perspective. Let's move to the private sector and hear from them that what are the constraints, so what are the challenges they face in implementing some of these demands, or at least which are come out of the, the whole objectives of Islamic finance. So I'll probably let me start with Mizan Bank. Arif, could you kindly give your perspective, and then we'll move on to your neighbors and so forth.
Certainly. Bismillah ar-Rahman ar-Rahim. I think I've been I've been asked a tough question or a tough proposition that Mr. Samar Hassan believes or feels that Islamic banks are not doing enough. But I do want to take just a few minutes to try and explain the history, if you like, of Islamic banking in Pakistan, which I'm sure is familiar to most people in this room. And of course, Dr. Ishrad just walked in, and I think we're grateful to Dr. Ishrad because he was, and I was privileged to be present at the time when he granted Mizan Bank the first Islamic banking license in this country. But having said that, the so-called Islamization of the banking system was actually initiated much earlier, in 1985. And I remember that when Dr. Ishrad handed the license over the first Islamic banking license to Mizan Bank, he said that there is a great responsibility that lies on the shoulders of Mizan Bank, because this is the second time that the Islamic banking experiment, so to speak, is being given an opportunity in this country. And therefore, the first time this was initiated, unfortunately, due to reasons that I don't have time to get into, in a sense, did injustice, I feel, to the subject of Islamic finance and Islamic banking, and therefore created a very negative environment and a negative perception about what Islamic banking is all about. So in 2002, when this license was granted to Mizan Bank, we were cognizant of this failed failed history or precedence, if you like. So, so our first challenge as a team was really to establish the credibility of Islamic finance and the credibility of Islamic banking in this country, and to give the consumer, to give the people of Pakistan a choice between two counters, the conventional counter and the Islamic counter. So while I agree with what has been said both by the scholars and by a regulator, that social justice and possibly the inequality of income or unequal distribution of wealth has not been fully addressed by Islamic banks. But my only response to that would be that it's a little early. I think we need a little bit more time. Our primary objective at Mizan Bank was really to ensure that we safeguard the interests of our depositors, of people who came to Mizan Bank, because they had faith that, number one, that what we were offering was truly a Sharia compliant product. That was first and foremost very important. Should the credibility of the product was absolutely critical. And I'm grateful to our Sharia board and everyone in our Sharia team and our research team and everyone else at Mizan Bank who worked very hard to establish the Sharia credibility of our products. And at the same time, to safeguard their interests. And by that I mean, Samar Saab has pointed out that Islamic banks are not doing enough in the area of SME or on agriculture. But unfortunately, the reality is that the non-performing ratio in these segments historically in Pakistan has been extremely high, in very high double digits. And we were cognizant of that, and therefore our primary objective was to ensure that we first set a very viable and stable base from which to build. Now, alhamdulillah, I think 14 years down the road, we are focusing on these areas much more aggressively, much more rigorously. Earlier this year, and I think Samar Saab, you were present at the launch ceremony of our branchless banking initiative, where we have teamed up with one of the leading telcos in Pakistan to launch our branchless banking initiative. And I think that will go a long way in promoting or helping Islamic banks address the subject of financial inclusion. At the same time, what we are pushing and we are focusing on building the requisite expertise, because it's very important to make sure that when you enter a segment or when you enter a market or when you want to implement or introduce a product in these new segments. When I say new, because we were not active in them, it's very important for you to build the right expertise, and therefore we have worked hard to do that. We are now entering the SME segment. We have recently signed a joint venture agreement, in fact, with Karandaz to promote this segment. Karandaz, for some of you may be familiar, is a DFID stroke World Bank sponsored initiative. So, so the point is that I think Islamic banks are have done relatively well in this country. If you look at the growth, it currently represents about 13% of the total banking industry. So in 14 years, the market share that the Islamic banks have captured from the conventional banks is, in my opinion, very good, which therefore now ensures that the timing and the base is there to enable the Islamic banks to really make a difference, to really take Islamic banking services and products to a hitherto untapped segment, if you like, of society, which did not have access to the financial institutions, or they chose, as Samar Saab pointed out, that a study shows that a lot of people choose to stay away because of riba. So, so I feel that the future, inshallah, for the Islamic banks is bright. I think Islamic banks have shown that they can operate profitably, and that they can develop the full range of products and services that are required to cater to all segments, be it SME, agriculture, or even the larger segments of our corporate banking.
Thank you so much. So let's move on to, please.
Bismillahirrahmanirrahim. I'll take forward what Samar Saab and Arif Saab said. To my humble opinion, this market share of 13% and doing Islamic banking, what we are doing in the market for the last 13-14 years since 2002, quite frankly, to my mind, it's not the market share or the balance sheet footing of the Islamic banking. 13% to my mind is misleading. How many customers they have come to Islamic banking, it's more important to me. And they may be 5, 6, 7% of the total number of accounts in the industry. As Samar Saab said, that it's already very low. I think if we talk about going to individuals and booking of assets, our 70% asset of the industry in Islamic banking are corporate assets, and quite frankly, very few corporates are of Islamic mindset. They're mostly looking for cheaper finance. So we need to really work as an Islamic banking industry for the small enterprises, for the medium enterprises. We must look for individuals, consumer finance, agri-finance, and microfinance. Islamic banks are so far shying away from microfinance. There is hardly any considerable leasing company who work with the small enterprises and individuals. So there is need to do a lot more. It's responsibility for all Islamic banks and Islamic bankers to really come up with the solutions and with the more open heart. Now regulators are there. Shariah ulama, they are mashallah trained. 13-14 years back there was a huge gap. Shariah ulama, they were not having the practical experience, and bankers like us, we were not having any knowledge of the Sharia. So that gap is now narrowed down. So I think that the platform is set for us to really strike to those areas where we can really approach a large and masses. And my next comment would be about the social capital. I think with all the people they are involved so far, my feeling is, alhamdulillah, about 90% of the people, or maybe more, they are working for Islamic banking and Islamic finance with the conviction. And that is the real social capital we have worldwide and countrywide. So there is a time has come up for all, for Sharia ulama, for the regulators, for academia, for commercial Islamic bankers, to really strike hard and really provide the benefits of Islamic finance to the people who are really looking for it. We're not only meant for corporate banking, we're meant for individual, we're meant for the prosperity of the economy and for the prosperity of the world.
Thank you so much. It's good to know that you have good intentions in mind. That's a very important first step. So can we move to Mr. Zubair?
Bismillahirrahmanirrahim. Assalamu alaikum, everyone. Thank you, Dr. I think pretty much the topic has been covered by the speakers before me. But there's one particular point I would specifically like to highlight. When we talk about financial inclusion, I think in the case of Islamic finance, as Arif Saab and Rizwan pointed out, that it started in Pakistan about 13, 14 years back. So it does not have a long history in terms of the Islamic banking that we are doing in Pakistan, even though it traces back to other institutions back in 80s. But formally, recognition through a Islamic banking license, it started in early 2000. The point I would like to make here is, which is I think a prerequisite to Islamic finance is essentially creating the awareness. I think it is very important on the part of the Islamic banks to also continuously work in terms of creating more and more awareness, because there are studies even today in Pakistan and even for other countries where there's a question in terms of how far the Islamic finance or Islamic banking is actually recognized or people are aware about it. So I think before we actually move to the stage of financial inclusion or covering the masses, and in terms of really bringing them to the fold of financial inclusion, it is important that we also create a very strong awareness in terms of not only Islamic finance. I think generally people are aware about Islamic finance. It's essentially the products and services that Islamic banks and Islamic financial institutions are offering, and that's where I think awareness has to be created. One of the points that Arif Sahab mentioned, I would also tend to agree with him, because based on our first-hand interaction with clients, people generally have a very negative perception about Islamic banking. Now, that perception also has to be neutralized before we can actually make any meaningful development in terms of these clients. For example, it's very common for clients to believe that Islamic finance is very expensive in terms of when it comes to financing. Then there's also a perception, for example, that Islamic banks do not offer a very healthy profit rate on deposits. There are also perceptions related to fixed rate lending or variable rate lending, etc., etc. So my proposition would be that we also need to address the awareness part, and then also focus more on the inclusion. And in terms of financial inclusion, for example, I think there have been considerable developments. What I can share with you essentially from the DIB platform, we are also very actively involved in terms of SME financing. They've also been a model that we have worked on in terms of branchless banking booths. Now, yes, I fully take the point that Samar Saab mentioned, that our share in the overall SME financing, agriculture financing, or other areas, microfinance, etc., in the context of Islamic banks may be low. But then that has to be seen in the overall market share that Islamic banks have. So, and plus the conventional banks, the leading ones have been there in the country for the last 68, 65, 70 years. Islamic Bank has only started about like meaningfully like 10, 12 years back. So, but I think the good news is that most of the Islamic banks are fully conscious in terms of making inroads into these areas. And I'm sure going forward, definitely the contribution of Islamic banks in these areas, especially covering the financial inclusion, will definitely increase. Thank you so much.
Thank you so. Thank you so much. Unfortunately, I think we are running out of time, but I just want to have a very quick couple of questions. I think we have heard from the private sector, but we need to hear back some response from our State Bank colleague. I think maybe I will just, one question I would like to add. I understand that there is a provision for granting licenses for Islamic microfinance banks, but I understand no one has applied for it. could you shed the light that what is the reason that no one has so far applied for an Islamic microfinance bank, and what is the,
Yeah, thank you, Dr. Saf. Before addressing to that question, I'll just touch upon some of the points that were mentioned over here. First of all, let me clarify it again. When I said that I argue against this motion, then my purpose was that I wanted to say that I want to have that, but actually it is not happening on the grounds. Secondly, let me also clarify here. You mentioned about financial inclusion. When I mentioned about financial inclusion, I never thought of a social service. I was talking of actual real business. When I said that financing to agriculture sector, financing to SME sector, financing to microfinance sector, and financing to the housing sector, it makes a perfect business sense. It's not a social service at all, number one. Secondly, there's a live example of success. I mean, in case of Mizan, we see that there is a substantial progress in case of housing finance by an Islamic bank because of the natural access between Islamic banking and the real asset on musharaka, diminishing musharaka basis. Secondly, yeah, you mentioned that 15 years. Now, my only fear is that a decade or 15 years, if we don't change, then sometimes we become habitual of that. I don't want to have that. I mean, as a regulator, that's one of the greatest concerns, that we don't become habitual of that. So, and I'm happy that people have started thinking, industries thinking about that. NPLs, you mentioned about NPL. That's a very interesting point. This NPLs of huge numbers, let me say it, is a myth. The reality is something different. If you look at even SMEs where the NPLs are said to be in 20s or something like that, we'll have to look at, and we actually in the central bank are doing that analysis, that to what percentage of that NPLs pertains to the prior periods, the periods which are coming from 2000, 2001, 2, or even prior to that. And actually, if you look at financing to these real sector by Islamic banking, that exactly takes care of this high risk element, because then what you are doing is that you are sharing your risk. I totally agree with the awareness point and perception issue that these need to be improved, and apart from the banking industry side, we at the central banks are fully cognizant of that, and we are doing a number of programs. Yes, Dr. You were right that the whole enabling regulatory environment is available for setting up completely Islamic microfinance banks, but as we have seen in case of even in case of the banks, that the banks conventional banks that find it easy to move towards first setting up their windows, Islamic windows or Islamic branches, and once they see that the volumes have been generated enough, then they move from this branch mode to the full-fledged subsidiary mode or full-fledged Islamic mode. That is exactly the process that we are watching in case of microfinance banks as well, that some of the microfinance banks, they've started opening up their Islamic branches. But of course, as a regulator and as a promoter of Islamic banking in Pakistan, we very strongly support formation of Islamic microfinance banks. Thank you.
Thank you so much. So very quickly, I think we had a very good insight. We have heard from both sides, from private sector and from the regulator perspective. So just before I close, I have very quick two questions from coming back to our academia colleague. So Professor Youngbro, Bao, could you kindly, maybe you have heard them, their issues, and any piece of advice for them from your perspective?
Yes. Let the people or supporters to become as a large population to accept the risk-sharing mode. That the only approach is to emphasize education. There is a proverb that the Chinese philosopher said, here I share with you. Benefit for 1 year is to plant a rice. Benefit for a decade is to plant a tree. Benefit for a century is to educate people. So people have distance to accept the idea of risk sharing in our financial system. We need to be patient, and we keep because I believe risk sharing reflects the objectives of Sharia, maqasid al-Sharia. So I hope in future we can find all of us accept this idea. And inna Allah ma'a sabirin. Walillahi alhamdu wa tawfiq.
Thank you so much. I'm now coming back to Professor Abbas Mirahor for his piece of advice. I know that you are quite a big advocate of use of Islam's redistributive instruments for enhancing inclusion and shared prosperity. Could you share your thoughts that how these redistributive instruments like zakat, waqf, qarde hasan, and khairat, how these can be mobilized in a country like Pakistan where the poverty levels are so, and so how could these instruments of redistribution could be mobilized, and maybe a hybrid can be created through the banks and these other instruments to provide a better inclusion for the people.
Thank you very much. Let me start with one. You asked for advice. I'm old enough to give advice, I suppose. Our problem at the root, as far as Islamic finance is concerned, at the root is this, that our bankers, our scholars, our regulators, our policymakers, they have a Muslim heart. And no other place in the world than this one. That is true. The problem is, while the heart is Muslim, the mindset is secular. Please remember that. I think if you look at the way you ask questions, the way you provide answers, the way you defend Islamic finance is all from a secular mind. And I'm not suggesting don't use scientific econometric studies. No, I'm a very strong advocate of scientific methods. But it is reversed now. In other words, it's a secular mind that tries to address the questions, is there any validity to Islamic finance? Is Islamic finance all that it's supposed to be? And then you go and start, from the secular mind, you try to search for methods and methodologies from the secular world to answer the question. I'm suggesting if this mindset changes to the point where you really believe Islam is the answer and has the answer, then the methodology, the way you go to answer questions, the way you organize paradigms will change. Exactly the same scientific methods, but the way you approach it is quite a bit different. I can look around here. I know people, alhamdulillah, really good scholars, but I also see the same things in scholars as I see in bankers, in policymakers, that they really do not believe in the 21st century Islamic finance, a finance that says no interest rate can work. So how can I, in other words, you always then have to try to go around the system to try to find a way of beating that and find a way of doing Islamic without really doing what Islam's spirit tells you to do. And this is also true of fuqaha. The fuqaha too are not willing to go outside of the box of fiqh that has been passed down generation after generation. To ask a question, I'm in 21st century. There is this finance out there that can be extremely helpful to the Muslim societies. How can I use this to answer the questions of Islamic finance's problems? So that's it. So one of those methods, for example, is methods of securitization. Everybody says it's a bad way of doing it. But I tell you that there is a solution there. For example, every one of us take a trip. We all, I mean, if you really believe in Islam and Rasul sallallahu alaihi wasallam's hadith, you will give sadaqah. So imagine if you could just go to every let's say travel agent and say that, what I want to do from now on is to say everybody who travels puts, let's say, 10 rupees, 15 rupees in as sadaqah for travel. You already securitized it. I mean, that's one example. You can do that with zakat, you can do that with everything. And that organizes, mobilizes the funds for particular purposes, anything you want to do then. So these methods are available, and we have to use them. But in order to use them, you have to have the mindset that sort of it becomes compatible with your heart in order to say, there is a solution, Islam has a solution, I look everywhere for that solution. We have one hadith of our Rasul sallallahu alaihi wasallam, al-hikmatu dhalla al-mu'min, that wisdom is a lost commodity for the mu'min, and he will search and find it, or she would search and find it anywhere. The whole world then, as we know, Rasul sallallahu alaihi wasallam said, is a masjid for Muslims. So is everything else that's out there created by humans, because Allah uses everything as wasila to create things in order for His kalama to become ulya. Assalamu alaikum.
Thank you so much. If I may modify your analogy that that heart is Islamic, but pocket is secular, I think. So I think we have some time for any questions. So could you please, I would suggest that please refrain from long comments, just be asked very quick questions. Let's start with Professor Kabir Hassan, and please identify yourself.
My name is Kafil Zaheri, and I'm representing Novatex Limited.
Okay.
My question is from Mr. Samir Hasnain. So please, conventional banks have been offering long-term loans thanks to the SBP's long-term finance facility. But on the other side, we do not see the Islamic equivalent of the long-term loan finance facility, as SBP hasn't launched any scheme on that. So the demand is there, and there appears to be a problem on the supply side. So my question is to you that when will the Islamic equivalent of the LTFF be launched by SBP?
I mean, I would suggest try to focus the question close to inclusion rather than more general, but I will let quick answer, but please keep your question close to linked with the topic, which is inclusion and shared prosperity.
Thank you for that question. We are fully aware of the necessity of that instrument, and actually we have done a lot of work on that, and we are actually in the final stages of its fine-tuning. So once it's approved, then it will be available. So all work has been already done on that. Thank you.
Mr. Kabir, please, can we have, and then anyone on this side?
Actually, this is not a question. I just heard one of the gentlemen from the private sector, banking sector, that Islamic Bank is difficult for them to do microfinance. You can look at the example of Islamic Bank Bangladesh Limited. It is doing microfinance as part of its business model, not as an outside thing. So actually, there has been some theoretical work done by Habib Ahmed. It has been shown that through the Islamic Bank, you can reduce the cost of providing microfinance. You can use your excess liquidity as a low cost of fund. And this RDS model of Islamic Bank Bangladesh Limited, I have done a projection. It was supposed to be take over the Grameen Bank by the 2015, but because of this government for the last 2 times, and it is sort of slowing down, because for the last 10 years, there has not been any branch given to the Islamic banks or any new Islamic banking license. So I would request you look at this from the policymakers' perspective, and one of the reasons that you did not get any license for Islamic microfinance banking, that could be one of the reasons, because of this cost of doing business is very high. Thank you.
Thank you so much. One question, please. Anyone from this side?
Ji, Assalamu alaikum.
Please identify.
My name is Abdullah Ghaffar. I'm from Al Barka Bank, and my question is to Mr. Samir Hassan regarding the opening of new branch in the remote areas of Pakistan. So I've heard you before also on pointing this point. So I would like to say, since you already know that opening a branch in remote areas entail a lot of cost, not only cost in terms of establishing the branch, but in terms of retaining and attracting human resource, as well as there is an operational and control area which needs to be fortified in terms of keeping the branch running. So what measures or what incentives do you think the banks need to have? And because since banks are not opening the branches themselves, it means that the opening of branches is not that much feasible from the cost and earnings point of view. Is the State Bank considering some incentives such as maybe the reduction in SLR or CRR requirement for deposits generated from those branches?
Can I address? Yeah.
Yes, please.
Quick answer to that is the reason of mentioning concentration of branches was that I wanted to show as to where the concentration of Islamic banking is. But the solution I already mentioned is in technology. You don't need to have a full-fledged branch over there. In order to have the financial inclusion, branchless banking model is one of the excellent model where without having a presence of a full-fledged branch, you can have the agent, you can have the M-wallet accounts available, so you can use that technology. So you don't need to have to establish a full-fledged branch, you can use that as long as the financial inclusion is concerned.
Well, thank you so much. Sorry, I think we have already gone above time, and I'm really thankful to all our panelists. I think it was a very, very good debate. We heard from everyone's perspective. So with that, I really appreciate and thank all the panelists. Thank you so much.